There's a loan in Britain that 11 million people are carrying, and almost none of them call it a loan. It has no application form, no agreement in a drawer, no repayment date, and it charges nearly double the interest of the credit card you've been taught to fear. It's your bank account reading slightly below zero. And the reason it doesn't feel like borrowing is not an accident. Somebody designed it that way. And by the end of this video, you'll see exactly who benefits from you never noticing. Here's what you're about to discover. What that minus sign actually costs per month in real pounds. Why nearly every major bank charges almost exactly the same suspicious number for it. And the one line on your statement that most people have never read once in their lives. The stakes are simple. If your account spends more of the month below zero than above it, you're paying for one of the dearest debts on the British High Street, while worrying about cheaper ones with scarier names. That quiet monthly drain has a price. For a typical stuck overdraft, it's hundreds of pounds a year for standing perfectly still. The fantasy goes like this. An overdraft is just a bit of slack. A cushion, the bank's friendly way of saying, "Go on, we'll cover you till payday." People say, "I'm in my overdraft," the way they say, "I'm a bit tired." A mild, temporary state, nothing serious. Now, the reality. An overdraft is a loan at interest from a bank, secured against nothing but your habit of not looking at it. Calling it a cushion is like calling a taximeter a comfy seat. Technically true, but the whole time you're sitting on it, it's counting. That's joke one, by the way. There's exactly one more, so pace yourself. And here's the first crack in the friendly story. The interest rate. Do you actually know yours? Most people know their mortgage rate to the decimal and have never once looked at the rate on the account they use every single day. So let's look it up together, because the number has a story. Back in April 2020, the financial regulator, the FCA, the people who police how banks treat you, forced a big clean-up. Before that, unarranged overdraft fees could pile up to the equivalent of over 3,000% a year. APR, by the way, just means the yearly cost of borrowing. The bigger the number, the dearer the debt. The reform genuinely fixed something ugly. Banks now have to charge one simple rate. No daily fees, no penalty charges for slipping over. Then came the strange part. Freed to compete on price, nearly every major bank landed on almost exactly the same number. Lloyds, 39.9%. HSBC, 39.9%. Halifax, Santander, Nationwide, First Direct, 39.9%. Barclays, feeling generous, 35%. Some accounts run as high as 49.9%. The regulator itself grumbled that it expected competition and got a coincidence shaped like a cartel. The human consequence? Whatever bank you're with, the slack in your account is priced at roughly 40% a year. Which raises the obvious question, 40% compared to what? Let's walk the same money through 3 doors and watch what it costs. This is an example, not your exact bill. You borrow £1,000 for 1 year. Door 1, a personal loan for someone with decent credit, under 10%. Call it 50 to 90 pounds in interest. Door 2, a typical credit card, low to mid-20s%, 220 to 250 pounds. Door 3, your friendly, casual, doesn't really count overdraft, around 400 pounds. Same 1,000 pounds, same year. 4 to 8 times the loan and nearly double the card everyone's been taught to treat as the dangerous one. The debt with the politest name charges the most, which in British finance is practically a law of nature. And if a year sounds abstract, wait until you see what a single ordinary month costs, because that's where this gets personal. Here are the real numbers, at the typical 40%. £500 into your overdraft for a whole month, about £15 gone, just for being there. £1,000 under, about £30 a month, £360 a year, and you haven't bought anything. You've paid £360 to stand still. Borrow £2,000 for just 3 months, a car repair, say, after one of those MOT phone calls that ruins a Tuesday, and it's around £200. The same 2,000 on a 10% loan, roughly 50. Same money, same 3 months, 4 times the price, purely because one is labeled loan and gets shopped around, while the other is labeled my account and gets ignored. That's the emotional trick of this whole product, the constant low-level payday pressure, the fortnight of small anxieties at the supermarket till. All of it feels like weather. It isn't weather. It's a bill. But if it's this dear, why doesn't it ever feel urgent? That question has a genuinely clever answer. Every payday, your wages land, the minus sign vanishes, and your brain files the debt as cleared. It wasn't cleared. It was paused. If your balance spends most of every month below zero, you are carrying the same debt all year round. It just hides itself for a few days each month, precisely when you'd otherwise worry about it. A credit card statement stares at you from the doormat. The overdraft is the only debt in Britain courteous enough to leave the room whenever you look for it. That false relief on payday morning, that's the feeling to distrust. And while you're not looking, someone else is. Every lender who checks you can see how you run that account. The occasional dip, cleared quickly, fine. Living past halfway, a warning flag. Maxed out or over the limit without asking, it reads like a missed bill. So the overdraft charges you twice, interest today, and a worse rate on tomorrow's car finance or mortgage, because the overdraft doesn't forget. Which brings us to the question underneath everything. If this product is this expensive, this sticky, and this invisible, who exactly is that good for? Subscribe for honest breakdowns of how money in Britain really works. Here's the part nobody says out loud. Banks make a fortune from overdrafts, and specifically from people who would never, in a million years, take out an expensive loan on purpose. Careful people. People who'd research a personal loan for a week, sitting in a 40% debt for years because it never introduced itself as one. Notice what the product does. No bill arrives, so nothing demands attention. No fixed payment, so it never shrinks on its own. No end date, so it never finishes. Payday resets your worry, but not the balance. Every feature that makes it feel casual is a feature that keeps it running. Banks call it a facility, a word for things buildings have, like lifts and car parks. This is a loan at nearly 40% with excellent branding. After 2020, the fees were simplified, and the price landed at 40% almost everywhere because the customers who'd shop around were never the point. The point is the millions who don't. 11 million people use an arranged overdraft. Every one of them, every month, is either a customer who checked or the margin. The system isn't broken. It's working exactly as designed, on the assumption that you never read one particular line on your statement. So let's go and read it. 3 checks, all free, about 10 minutes, no products. Check 1. Find your rate. Open your banking app, account details, look for the overdraft interest rate. EAR, it'll say, which just means the yearly rate. Read the actual number. Check 2. Find your real debt. Scroll the last 3 months and write down the lowest your balance dropped each month. That low point, not the payday number, is what you actually owe, because it's the part that never clears. Naming it out loud is oddly powerful. A debt with a number is a problem you can solve, while a vague minus sign is just a mood. Check 3. Price the escape. Compare that debt against the alternatives you already saw, a low-rate loan, even an ordinary credit card, and check whether your bank gives a free buffer, often the first £50 or so. While you're there, look up the current account switch service. 7 working days, everything moves automatically, and banks often pay a few £100s to switchers. Yes, you can genuinely get paid to leave a 40% debt, which is the closest thing British banking has to a happy ending. That was joke too, and it's also true, which is the best kind. And if the honest answer is that you can't see a way back above zero, tell your bank first, because since 2020, they're required to help people stuck in overdrafts, including freezing or cutting the interest. Then the free debt charities, Step Change, National Debt Line, Citizens Advice. They see this exact situation every single day. It costs nothing, and nothing you say will shock them. Quick honesty note. This video is education, not advice. It isn't personal financial, tax, legal, insurance, mortgage, or investment advice. Everyone's circumstances are different, so check your own numbers before acting on anything here. Comment question. No judgment attached. When you check your overdraft rate tonight, and you will, is it higher or lower than you guessed? Be honest. The comments are a confessional, and absolution is free. And once you've seen how the quietest debt in Britain prices itself, there's a bigger machine behind it. The file that decided your rate before you ever asked. Your credit record, who writes it, and what it says about you. That system has rules nobody explains either. Same time, next video.